with about 30 seconds to go. Let's see, is there anything else I want to change out here? Got an indice, we got a currency pair, we got the dollar index. I think we're good. I think we are good. And again, we're coming into the numbers. Don't go anywhere after the numbers. We got breaking news right now. Anyways, let's talk a little about gold in all of this. Gold is making a move higher, but I want to caution anybody who is incredibly bullish on gold, because gold is nearing what I would say is a pretty strong area of resistance. So if we do get some numbers here today that poke gold higher, what would that be? Well, it would be probably cooling inflationary numbers that would weaken the dollar and possibly give gold a little bit of a leg higher. Now, I'll give you my honest position here. If we make a push up higher, I am going to be short biased on gold, as I believe this is about a 50% retracement from the highs. Let me see if I'm right about that. Yeah, so a 50% retracement comes into play right around 1880. I think that if gold spikes up higher here today, there could be a little bit of a short bias that could come into play. Now, this is kind of a daily chart level. Really, this 50 to 61.8% retracement zone could be interesting to watch out for possible sellers in this area. Now, again, this is a trade idea, and I could be totally wrong about this, but I think that gold has more bearish incentives than it does bullish. So let's just say, for example, that gold pops up into that 50% retracement. I'm going to watch for the dust to settle. I'm not just going to short it on the spike because, again, it could be very sporadic. So I'm going to watch to see what the numbers come out to be, which, by the way, time count, we got about 6 minutes to go, 5 minutes to go here until we get the numbers. A pop here to the upside. Again, we've got CPI coming tomorrow. So even if we do get a pop, my opinion would be most likely, if you do get a pop, is probably not going to sustain itself too long. That's my honest opinion. Again, when I'm telling you guys this, I can be totally wrong. And a lot of times I have to kind of warn that, because new traders think that, again, I've said this many times, new traders often overestimate the ability of somebody who's been trading for a long time and who is quote unquote a professional trader. We are not market wizard forecasters, right? We don't know what the market's going to do. Certainly, it's all about risk reward, and it's all about probabilities. My opinion, you take a look at gold. I have a generally more bearish reading on gold from the stuff that I pay attention to, and I'll go through that real quick. So we're getting a -6 score. COT data. Big money has a really big bearish bet going on recently on the gold market, and that's also coupled with strong dollar bullishness on the smart money tracker. So I want to show you, when I'm saying smart money tracker, I'm talking about the commitment of traders data and how we showcase it in the EDGEFINDER, which is our market software. So I want to show you this. So gold, big overall bullishness relative to bearishness. There's a bias here to the bullish side in terms of net positioning. But as of the most recent filing, we saw that shift. We saw a recent change be pretty negative for gold, meaning a pretty bearish move in smart money positioning. So that could mean letting go of long positions or increasing short positions. Regardless, the point is there was a bearish move in the gold market in terms of commitment of traders data. And if we take a look at the dollar, we have 75% of long to short ratio on institutional money. And we have a big increase in dollar bullishness. So in my opinion, as gold floats higher, I think the risk to reward becomes more in favor of a bearish reading. So again, we've got 3 minutes to go, guys.
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the Edge Finder with the link down in the description below. And again, get it for the special discounted price when you use promo code A1YT at checkout.
I'm watching gold this morning for a possible sell setup. We'll keep a close eye on that. There's 600 people in here. If you guys would do me a quick favor, hit that thumbs up button, subscribe if you're new, click the notification bell, because we will be back tomorrow for CPI numbers. And I wouldn't want you guys to miss that. That one's going to be probably even more interesting here to the markets. So again, I'm watching for this idea. If I do take this, you guys will see it inside Discord. Guys, we're about 1 minute out. Let's go ahead and set up our charts to watch the numbers. Let me go ahead and drop this to the 15-minute. We got gold top left, guys. Euro bottom left. We'll go, let's do the S&P 500 top right. See how things play out this morning. So we got Euro, gold, S&P, dollar index, all on the 15-minute chart with about 30 seconds to go. Let's see, is there anything else I want to change out here? Got an indice, we got a currency pair, we got the dollar index. I think we're good. I think we are good. And again, we're coming into the numbers. Don't go anywhere after the numbers. We got breaking news right now. All right, we should see some movement here. S&P 500 initially down, the euro dollar down, gold coming down. Dollar index is up. That would perhaps suggest that inflationary numbers were hot. But again, it spiked very briefly. So let's go see what the numbers actually were. Okay, yes. So PPI numbers, both core and headline, were hotter than expected. 0.3% month over month for core and 0.5 compared to the 0.3% that was expected for month over month. So that would suggest that the dollar looks strong as inflationary pressures persist. So we did see the exact reaction you might expect, a pop in the dollar here. And that is really interesting considering, again, we go into CPI numbers tomorrow. And what this does is it calls into question, well, is tomorrow's CPI number, is that going to be also hotter than expected, which the market is not going to like, especially following strong jobs numbers last week. There was mild wage growth, which was good for the inflation story. But in terms of strictly inflationary pressures, if we get hot CPI and PPI this week followed or preceded by strong jobs numbers, it's a little bit concerning. Okay, so the dollar does seem to be rounding off the bottom here nicely. The question will be if the dollar index can follow through on this, because the initial number, like I said, out of PPI this morning was strong. And again, this is going to probably put some pressure on the indices. You can see they gave back some gains. But as I mentioned earlier in the stream, the attention now turns to the CPI number. So again, yes, the dollar index made a move here, but I wouldn't necessarily say the dollar index is just going to scream higher for a day straight, because tomorrow everyone knows that we have CPI data to follow, which is really important to the market as well. So again, we'll keep an eye on this, but I think gold, if it does spike up here this morning, if we do get some price action to the upside, I will actually be more enticed now to be on the sell side if I can get that setup that I mentioned earlier. So I do like that 50% retracement. Stops probably above the 61.8. It's a little bit of a swing trade, but I will keep an eye on this one. If it does want to shoot up here this morning, that's an idea that I'm going to be interested in, potentially myself. So again, we got a nice bearish reading overall from this. Also, retail traders are starting to really pile into longs on gold, at least as of the latest data that we have here. We know if retail traders are really long on something, that can be a pretty strong bearish bias. And, flip side is that if retail traders are really short something, it can actually be bullish. That's not necessarily, I want to say something. A lot of times traders love to jump to conclusions with certain indicators and turn them into self-proclaimed holy grails. The thing about market data is that market data, it's really hard. There's no single indicator that just gives you the magical answer in terms of what the market is going to do next. If it was that easy, everybody would just be a millionaire, right? Really easy stuff. But that's not how markets work. So what we try and do with the Edge Finder is we try and combine lots of data, lots of key statistics and figures and economic data, and positioning from market participants. And we try to get a reading, a overall reading. So here's what the Edge Finder is currently at. If you guys want to see the top setups window, let's narrow it down here. We're going to just look at very bullish and very bearish readings currently on the Edge Finder. So things that are very bullish: dollar yen, CAD yen, Kiwi yen, Aussie yen, dollar Swiss. A lot of yen crosses here, getting pretty bullish readings on the Edge Finder. You flip it around: pound dollar, euro dollar, Aussie dollar, pound Kiwi, S&P, gold, pound CAD, Aussie, New Zealand. These are our bearish readings currently. So what this is telling you is that the algorithm, which pulls in all of this data at once, it's looking at all of these metrics, judging them, interpreting them, and punching out a bias for us in this column in the form of a score. That score then is generated into understandable human language, like very bullish, very bearish. So this is where I find all of my setups every single day. I use the Edge Finder. Someone actually got mad at me in the video, one of my videos recently. They were like, Nick, you use the Edge Finder in every video. And I was like, I responded to the comment. I said that I use the Edge Finder every day in my video because the Edge Finder is a true reflection of the strategical points that I look for in trades. So of course I'm going to use it in every video, and I genuinely use it as a utility to myself. It is something that is for sale, and I always try and stay transparent about that. It's a software tool that we've worked really hard, and we do sell copies. Again, you can pick up a copy on our website if you're interested in it, but I do genuinely use it for its utility. And I know a lot of people in the audience also watch my videos to try and see what the Edge Finder has to say. I mean, even if you don't own it, it's still a very useful indicator to look at a lot of data at once. Frank, PPI numbers came out hotter than expected. What do you think?
All I can say is so hotter than expected, lower than last time. So I don't know. That just looks mixed to me. I have on my screen the just the chart of the PPI over past several months, and this one came in lower, but it was, oh, my bad, sharing the wrong screen, but higher than expected. The expectations were lower than even last month, despite the huge spike that we saw in PPI. The expectations came in lower. But what I see is the end result is a decline. So I don't know. It's something to consider, I guess. It's definitely mixed. CPI is going to be important as well. I don't know, but according to this, I guess maybe CPI will come in the same manner, just not as much as expected, or higher than expected, but not as much as last time. But we'll see. The market, hasn't really reacted too heavily to this. Gold is still up on this 4-hour candle, still in the S&P trade. It took an initial dip, but is now, slightly recovering.
Frank, show us your S&P 500 chart. So you're long still. Are you trailing a stop on that one? So for those of you guys who weren't here yesterday, Frank joined the S&P 500 bull train here, and you've caught a really good move so far.
Yeah, I got it last Friday, so I've just been trailing and being pretty, I guess, aggressive with my stop loss. Like I've been keeping it far away from price, hoping that if we see any sort of dip, it'll kind of recover from there. And so far it's been working out. I think I might trail a little more just to underneath this low here from last night in the 43.50s. But yeah, just gonna see where this trade goes. I don't really expect too much upside, I guess. We'll just have to see what CPI does. But we saw stronger NFP, higher than expected PPI. So all I can, I guess, speculate is that if it does continue to go up, it'll probably hit this trend line. Might be another short setup, but we'll see. I like the initial sort of rejection off these lows, and then this strong bearish candle on the day. So yeah, just trailing right now.
Fair enough. Yeah, no, I think you've got a really good move there, and if that inflationary number comes out even slightly cooler than what is expected, I think you may have a mad dash up to at least that trend line that you've got going down there, and it's a really good trade. I like the indices on the long side. I mentioned, Frank, earlier I was given my bull case for if we get inflationary numbers that are cool somehow tomorrow, cooler than expected in any way. That combined with the trend filter on the EDGEFINDER flipping bullish, as well as possibly retail sentiment shifting as well, that might tick us into more of a bullish camp. So I'm really, fingers crossed for a cooling inflationary number, but I'm not going to jump to conclusions just yet. I also just wanted to point out on my chart here, as you can see, that level of resistance that we thought might give us some trouble, it did. You mentioned it earlier, the market started giving back some of those gains and you had your trail and stop in place, but you didn't get trailed out. Market has recovered that, but that to me seems like, yes, there was a bit of a reaction to this level of resistance, but now price is just trudging higher. And again, probably looking forward to that CPI number. I also made this point earlier, Frank, but I'll say it again now that you're here. I think that the PPI number is impactful and meaningful to like dollar strength. It was initially a nice dollar pop as one would expect. I think it gave back those gains though, likely because the market is looking right around the corner to a Fed meeting later today and CPI tomorrow. So I think that, you got a little bit of a reaction, but back down because, again, anticipation for the next move. So I don't know, that's my speculation as to why it didn't persist.
Yeah, and the dollar still has that level that it won't break underneath, and there's not really a whole lot of confirmation yet. So these trades that I'm in S&P and UJ. Right now I don't have the entry or stop drawn in, but I am currently down. I'm hovering in some drawdown right now on this weekly candle, but I was looking at sort of this uptrend in the past several weeks, hitting this sort of resistance zone, which is just a previous high in the 150s, 151. And then this particular weekly candle just suggested to me that there was some buyer exhaustion, and the yields have been, they've been weaker. They went under 5%. So just speculating, you talked about the shift in trend. The EDGEFINDER still has indices not very bullish. I think they're still in the bearish camp. And then UJ's ultra bullish, but there was a shift in this sort of trend reading and sentiment that I think maybe if I can catch this early, we can ride UJ down maybe to the lows here in like the 147 or 145 range. So still chugging along in this trade, but nothing's really happened so far. But that's just my idea on UJ. It could definitely pull all the way back up and stop me out. But I like this setup here on the weekly, because it could set up for a long-term sort of trend to the downside if it does continue, but we'll just have to see.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.